Hi there, Michelle Brianza here. Whether you own a home or you build them, this message is for you. If you have a mortgage or you need one, the Bank of Canada's latest 25 basis points rate cut affects your payments and your buying power. So if you're on the professional side, such as a developer, a lender, a realtor, or really anyone who's shaping the credit markets, you're basically watching a government that a little too often is rolling out a lot of housing policy without consulting industry experts, prompting a lot of open letters and a lot of mounting frustration, or at least that's what I'm seeing. And this isn't just like a mortgage headline, it's a signal of where things are headed. Jobs, housing, capital investment, like where's it all going really? In my last video last week, I showed how falling interest rates often coincide with rising unemployment. I've been talking about it since last summer and the summer before that. And history proves it. The 2000s, 2015, 2020, lower rates are usually a response to stress. It's not a sign of strength. And today's numbers, they kind of fit that pattern. Unemployment is at around 7.1. And it's increasing. The quarter GDP dropped. And on top of that, Canada still does not have a federal budget and keeps getting pushed. But when it finally lands, most analysts actually expect that it'll be well over budget, which typically means that there's going to be more government borrowing and more money printing. And that extra spending could likely push inflation above the already current 3%. Depending on how long the delay lasts and how large the budget gap turns out to be. We'll see. Here's what the Bank of Canada move means right now. For variable, it means that lenders right now are dropping rates, and you'll start to see that over the next little bit. So if you have variable mortgage or HELOCs, lines of credits, you'll see a small, modest drop within the next 30 days or within your next cycle. Fixed rates, however, they're tied to bonds, which I've spoken about, and they've softened a little bit as well. So you're going to start to see some lower rate offerings, but those are going to come a little bit slower, just so you know. Prime rate right now sits at 4.7%, and that is directly influencing variable rate mortgages. Those of us who are veterans, we know that variable rates should be way lower than fixed rates, and they're not. They're pretty much at par. So choosing a variable is smart if you can ride out the full term, or if you can switch to a fixed product strategically. But if you plan to lock in later hoping that rates are going to fall, that's a calculated gamble. And as a seasoned mortgage broker, it's not a gamble. It's more like, going to the casino. So the good news is that most lenders will let you convert from a variable to a fixed at no cost, I'm hoping. Or there's 3 months interest penalty, but you're unlikely to get the absolute lowest market rate, just so you know, because they've already been going up. So this is where personal planning starts to matter, and I've been talking about this for a while as well. Are you selling within a year? Are you holding for 5 years? Are you comfortable with payment changes? Can you sleep at night? These are the kinds of answers that should drive the choices that you make, not the headlines. And as far as developers, lenders, policy watchers, the cut pretty much underscores how much policy is being made without meaningful industry inputs. I talk about that. It frustrates me. I think we should continue with the open letters from builders and lenders, and let's hope that this government continues to listen, or starts to listen at least. But if unemployment keeps rising and or growth stays negative, the Bank of Canada could very well cut rates again, which is nice, another quarter point. But again, it speaks more to economic weakness and not strength. And when we finally start to look at our budget, that again is going to drive inflation, and that means that rates are going to change later on. So here's the thing. I could talk about this forever. Whether you're renewing or buying or financing a new project, don't make decisions based on the news, and don't make decisions based on your bank only. I want you to strategically think about this sort of stuff. I tell my clients all the time, this is stuff that you should start 6 months to a year prior and really watching. And then by the time we get to 4 or 5 months, you know where rates are at, you can start locking them in, and you can make customized decisions. So again, my name is Michelle Brienza. I've been doing this for the last 28 years, and I love what I do. I try to keep it real here as much as possible. If you have any questions, lots of ways to get in touch with me, and let's see what we can do to help you out. Until next week, be well.